Hey guys, how's it going? It's Andy. It's been a while. I've been very busy, but we're back today to talk about the stock market. Yesterday, Thursday, was a doozy of a day. I was working out in the field. It was pouring rain. I had my AirPods in and I said, "Hey Siri, how's the stock market doing today?" And hearing that the NASDAQ was down 4 to 5% during the day is pretty startling. So today I wanted to talk about what I've been doing in the past month to take advantage of this extra volatility and kind of the mindset that I've been in to make it so that I haven't panicked in the slightest. I've been excited when the stock market's gone down, not really worried about it, because the mental gymnastics that you have to play when it comes to investing in the stock market, I think, is really important. It's not something that's talked about enough. You have people talking about, oh, this is the best stock to buy, this is when to buy it, but it's more important to talk about, here's the mindset you need to be in to not worry about these large drops in the overall market and to take advantage of these opportunities instead of shying away to the sidelines and either not buying a dip or just selling in general, because that's what we want to avoid at all costs. I'm going to put up on the screen right now what my portfolio is looking right now. As of right now, my account's down 8.68% so far in 2022, which, not great. But when you compare it to the NASDAQ being down, I think 22% so far in 2022, that's much better. And the reason why it's done better is because I've consistently added to my portfolio. So it's the idea of dollar cost averaging. If you bought all of your stocks at the beginning of the year, you'd be down significantly right now. But instead, I've been slowly adding. I've been putting in enough money where I'm going to take advantage of large moves to the upside, but I'm not investing too much money where, one, I'm either going to be worried about the dollar amount that it's going down per day, or I'm going to be pulling myself thin when it comes to the amount of money that I have sitting in my bank account. I made a video talking about why I wasn't buying any more stocks in March, and that was because I bought a car. And as a result, my safety net had been depleted pretty significantly. So I didn't want to put too much money into the stock market that would risk me having to liquidate some of my shares so that I could pay normal bills. It's been a month and a half, 2 months since I bought that car, and my safety net is back up to where it should be. So I've been buying pretty aggressively recently, especially as we've seen the market fall. With things like Bitcoin, I have, Robinhood is where I have all of my Bitcoin. So I get notifications whenever Bitcoin is down. I think it's 4 or 5%. And whenever I get that notification, I just buy. And I think that's a good way to kind of frame things in my mind. It's, if the stock market's going up, I'm not really going to look at it. But if I get a notification that the stock market is down big, as long as the reason why I bought these stocks has stayed the same, I'm just going to continue to add. So when you look at my portfolio, I'm trying to get it to the percent breakdown that I really wanted. When I made this portfolio, I was transferring over some shares from TD Ameritrade, which does not have fractional shares. And as a result, my shares of QQQ, which is the NASDAQ ETF, and Microsoft, ticker symbol MSFT, were much larger than I really wanted them to be. Now that I've added some more money, it's starting to get closer to where I want, but looking at it, Microsoft is still 27% of my portfolio, and going down to QQQ, it's around 15%. The stocks that have done really well for me, I guess, looking at the stocks that I own, Johnson & Johnson and Abbvie are the only stocks that are green since I've bought them. Abbvie has done significantly better than pretty much everything else. It did have some, I think it was a bad earnings report that shot the stock down, but for a while it was up around 10 to 12%. That's accounting for around 8% of my portfolio. Looking at it, we have 5%, 5.7% for Johnson & Johnson. Nextera Energy is 5.25%. Pepsico is 6.38%. Realty Income, ticker symbol O, is 8.8%. And then QYLD is 8.3%. So it's gotten to the point where I'm much happier with the distribution of just my money. I have enough variation when it comes to the stocks that I own that a major news story isn't going to kill me just based off of one stock getting killed. I have something like looking at it, PayPal. I thought I was going to do much better. It's down 35%. This is a growth stock and a high volatility play that has not gone the way I've expected. But when you look at it, it is 0.7% in my portfolio. So this is not something that I'm really stressing about or having problems sleeping at night. So let's go and look at my history for the stocks that I've bought, because I think this is important to not only show the stocks that you own, but also show that I'm consistently adding. So today I put in $50. I bought some QYLD. QYLD is an ETF that sells covered calls on the NASDAQ. And as volatility goes up, your dividend yield is going to go up significantly. I think volatility index is sitting around 35, which is much higher than its historical average. So you're getting some nice dividend premiums from that, sitting around, I think it's 11 or 12% currently. But when you look back at some of the other things, I bought, let's see, on April 27th, I bought Nike, Pepsi, Realty Income, Johnson & Johnson, and Microsoft. This was a day when the stock market was down. I put in some money and decided to buy some more of my favorite shares. This was a much larger than normal addition to my portfolio. Most of the time I put in like $50 in a week. This was a $100 addition just because I had seen the stock market had done very poorly in the past couple days and I wanted to take advantage of that lower price. Then we go back to the 21st. I bought Pepsico, Nextera Energy, Abbvie, Johnson & Johnson. We have dividends from Realty Income, which is a monthly dividend company, so I was able to get that and that was automatically reinvested. Let's see, I bought some Pepsico on April 14th. Going back, we have dividends at the beginning of April from Nike, Pepsico, Brookfield Renewable, QYLD. All these are automatically reinvested, so I don't have to worry about it at all. I think the less that you have to check your investing portfolio, the better. This is something where the longer you look at it, the more likely you're going to make a bad decision, in my opinion. When you look at how the stock market's been doing, it's going to bring up a lot of very strong emotions. And the way that I counteract that is by only checking my portfolio when I want to buy. I can check at it, just kind of see how the stock market's been doing, but I'm not going to deep dive in and look at how my stocks are doing. As long as the reason why I've bought the stocks has remained constant, I have no reason to really look and deep dive into, is this worth holding on to right now? I'm going to take the emotions out of it and only look at it when I'm in a good mindset and I'm ready to buy. And then going back to the end of March, on the 29th, I bought Johnson & Johnson, Home Depot, and Abbvie. So the general concept that I want to put across is that I am not stressing over the daily moves of the overall market. I look at it, and if the stock market's down like it was significantly yesterday, I see that as a fantastic buying opportunity, not as a reason to panic. The emotions of investing in the stock market is incredibly difficult, especially for people that have just gotten started in the past year and a half, maybe even 2 years. You had the pandemic crash, but then there was a lot of smooth sailing. Stocks that have done very well have shed most of, if not all of their gains from the past year, as the high volatility stocks have really been crushed. And some of the blue chip stocks that are not the sexiest plays have done incredibly well. That's why I've made the switch to the dividend investing portfolio in the past year, because I think that's a great way to take advantage of higher volatility, stock prices going down, and still being able to keep your foot in the market. Because what we want to avoid is taking money out of the market, because when the market does decide to go the opposite direction, that's when all the money is going to be made. It's not from trying to time the market. It's by being smart with the purchases that you're making sure that you're buying stocks that you think will recover if the stock market does continue to fall. And eventually it's going to turn around. We just don't know how long that's going to be. And dividend investing is the way I've been doing that. So when you look at the investment income, right now my portfolio, I'm assuming the dividend yield has gone up a little bit just because stock prices have gone down. But for the next 12 months, my estimated investment income is $58.22. So let's see, looking at that, $58, doing this live on air, 2100 is 2.8%. So the dividend yield has gone up. These are dividends that are going to be automatically invested back into my portfolio. And the great thing about a dividend investing portfolio is that while I continue to add in my portfolio, that number is just going to continue to climb. I think when I started the portfolio, it was sitting around $10. Now we're up to $58. So it's something that's going to grow with time as the volatility goes up. Dividends are going to go up as well, so that's why I've been taking advantage of that. So hopefully I can make more videos in the future talking about how I'm taking advantage of these higher volatility plays. But for right now, I just kind of want to make a quick update video about the stocks that I bought in the past month and what I'm planning to do going into the future. Let me know what you guys are thinking about the overall market, and if you've been enjoying this volatility, let me know what stocks you've been buying in the comment section down below. Thanks for watching. I appreciate all support, and I will see you in the next video.